Hi, everyone, and welcome to your Daily 5 for September 27th, 2022. I'm Leslie Jouflas, and Trading Live Online is my website. It's an educational website for traders. I do analysis weekly through a subscription, and you're welcome to join me. If anybody listening would like a trial, just email me, and I'll send you a link for a trial. But today I would like to take a look at some correlations with you, because I think it's interesting some of the correlations that you would assume might be inverse to each other are not playing out like they have in the past. So let's take a look. Now, you can find this on StockCharts.com, and this is really a handy thing. So if you have a list of stocks, or I have a list of ETFs here, and I want to see how they're correlated with the S&P. So the correlation means that the 1.0 correlation is the highest if it's 1.0. So you can see the S&P is correlated to itself. The technology sector is 0.98, and that is very close to 1. So these move in tandem with each other. So if the S&P is, sliding to the downside, as we've seen this year, the technology sector and these highly correlated ratios are likely to be sliding down with them. So the inverse correlations are when you get down uh, into negative numbers. So if you have a negative reading, then you have an inverse relationship between that asset and the S&P. Now, some of these are mid-range. Remember, we're looking at year to date, so beginning of this year to through September 27th. 2022. We're going to go down to shorter correlation time and see how these have changed. So we can see some of these lower correlations. They're just about mid-range here, and so they kind of move at times and not at other times. But what's interesting to me is how some of these correlations are sort of switching. So let's go down to a 6 month and take a look at this. So we see that in a 6 month period, financials, technology, they're still up at the top of the list, real estate, etc. But if we start to take a look at more of the mid range, now you can see gold starting to rise in the correlation. Now, generally, when you have down markets, the thinking is that there is a flight to safety in gold and in bonds. And here's TLT. This is the 20-year Treasury bond ETF. And you can see that the correlation is fairly high. And so these have not been acting like flights to quality this year. So I have found that interesting. And the other point that I wanted to kind of bring up to you today is like this one, the EEM. This is the Emerging Markets ETF. And this particular ETF is for global international stocks, mostly big cap stocks. And so in portfolio diversification, a lot of times it's thought that being diversified with global international stocks is going to help manage risk in a portfolio. But you can see the high correlation of these. So this is not offering downside protection so far this year. Now, when the markets turn up again, and if these are still highly correlated, then that might be a good time to go into them. But I think just understanding that the relationships of assets, those relationships can and do change in different periods. So let's take a look now a little bit shorter So we were on 6 months. Now we'll go to about, just a little over 2 months, about 2.5 months. We can see that the dollar index, the bullish fund dollar index, look at how negatively correlated that is. And if we just flip the chart on for it, look at the uptrend that this has been in all year compared to, we'll take a look at the S&P compared to the S&P, which we know has been in a downtrend this year. So we can also take a look at EEM, and we can see how that's followed the S&P. It even looks a little bit weaker than the S&P. If you notice the lows here, I believe these lows might have exceeded. Let's take a quick look at that. Well, these are the March 2020 lows, and this particular ETF that holds all those international and global stocks, this is much further down than what our indexes are right now. In fact, the levels of our indexes, let me go back to the S&P for just a second, and I'm going to put ours on a weekly chart too, so we get a little bit bigger perspective. But look at the difference. This retracement here was just about 0.50. My feeling is that this level has a good chance of being broken. Maybe we see a little bit of a bounce up, but if this level is broken, then I'm looking for some deeper retracements and a few other technical tools added. And again, you're welcome to come and have a trial with the weekly market setups if you'd like. So the correlation again on gold. So gold this year has not been a flight to quality asset. In fact, if we look on a weekly chart of gold, we see that this gold is, a deeper, here's the March 2020 low. I'm sorry, I had to kind of start that sentence over again. I had a little bit of a distraction here, but you can see the retracement here on gold compared, to here's the 2020 low, what we just looked at to the S&P. The emerging markets ETF is low. So it looks as though our indexes, may be following these patterns, and it looks as though we might be seeing some lower prices probably in the near future. Now, energy has been interesting as well, and I think it was in July I did a Your Daily 5, and I believe the title of it was something like something that is there a bounce coming for energy, but short term only. And so, my analysis was telling me that, it was ready for a bounce, but probably not going to be seeing new highs in it. It did form an A, a B, a C, a D. This is called a Gartley pattern. You have this swing up, a retracement, and then just about equal or so lengths on that second leg, and then you can kind of add a retracement that ABCD is within a previous swing. So it did just about a picture perfect Gartley sell pattern, and you can see that that's been declining as well. So the energy market, where again, sometimes that's used as diversification, has not been following that pattern this year. It's made it really tough for longer term portfolios. And I just clicked and pulled up the chart of TLT for the bond market. As we know, interest rates have been rising. The Fed has been aggressively trying to fight inflation and raising rates this year. And so flight to quality in the bond market is not happening either in the traditional bond markets. There's a few places that have been doing well. I bonds, if you know what I bonds are. If not, you might want to look them up. But they have a limited amount that you can invest in them. However, they've got, if I think if you purchase right now, if they purchase before the end of October, it's pretty high return at something like 9.2% right now. So again, I bonds. So you can look that up. But our traditional bond markets that we usually use for flight to quality, it's also not following the pattern. So lastly, I think I just want to show you, if we come down a little farther onto 20 days, we're still seeing, the dollar index is still, it's even more negatively correlated uh, than it was. And you can see, technologies, it hasn't really changed much in the ratio value, but some of these others over the 20-day period have moved up in their correlation to the S&P, and we can see that here when we look on the chart. Materials, industrials, everything is just sort of falling out of bed, so to speak. So this is a tool that you can easily add in, right through StockCharts, to sort of view those correlations, and keep in mind that they don't always follow, what the textbook rules are about them. They can invert. And so if you're expecting, a longer term move up or down, you might want to check the correlation if there's assets that you're holding in your portfolio, and that might help you to make some decisions. Well, I hope that you found this helpful today, and I will see you again on the next Your Daily 5.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.